Welcome to the Riskwiser zone, where we dive into the world of stocks and finance with a critical eye and a dash of skepticism. I'm your host, Lewis, and I'm delighted to have you join me on this journey through the markets. As we begin today's show, let's take a look at two stories that caught my attention. First up, we have Oracle Corporation, which has been making waves with its strategic partnerships and investments in the artificial intelligence space. According to a report from Yahoo Finance, Wedbush analyst Daniel Ives views the current dip in Oracle shares as a massive buying opportunity, citing the company's guaranteed future demand and proactive efforts to fortify its balance sheet. With a consensus rating of strong buy and a mean price target of $253, it seems Wall Street is bullish on Oracle's prospects. But, as we always say on this show, it's essential to separate the signal from the noise. While Oracle's repositioning in the AI market may indeed be a significant opportunity, we must also consider the potential risks and challenges that come with such a transformation. Negative free cash flow, for instance, is a red flag that warrants closer examination. Moving on to our second story, SanDisk shares have been on a tear, up over 250% since the start of the year. The company's enterprise SSD and NAND storage solutions are benefiting from the growing demand for AI infrastructure, and Intel's strong Q1 earnings and upbeat guidance have only added fuel to the fire. With options traders indicating a strong bullish skew and a potential upside of 17% after earnings, it's clear that the market is optimistic about SanDisk's prospects. However, as we always caution on this show, past performance is not necessarily indicative of future results. While SanDisk's momentum is undeniable, we must also consider the potential risks of a correction or a pullback. After all, a meteoric rise like this can often be followed by a sharp decline. As we navigate these complex market dynamics, it's essential to remain vigilant and critical in our analysis. We'll continue to monitor these developments and provide you with timely insights and expert commentary. We'll be right back with more from the world of stocks and finance on the Riskwiser zone. Welcome back to the Riskwiser zone. We're diving into the world of geopolitics and economics, where a perfect storm is brewing. The ongoing conflict in the Middle East has led to a significant disruption in global oil supplies, with the Strait of Hormuz being a major choke point. As a result, oil prices are soaring and the effects are being felt worldwide. According to reports, the loss of oil supply could double next month to 5 million barrels a day, or 5% of world supplies. This has led to warnings of economic recession, with Germany slashing its economic growth forecasts in half and the International Monetary Fund trimming global estimates. The situation is complex, with multiple factors at play. On one hand, the conflict shows no signs of abating, and the risk of further disruptions to oil supplies remains high. On the other hand, efforts are being made to mitigate the effects, including emergency measures by major economies to counteract the supply shock. It's essential to consider the potential consequences of this crisis, from higher fuel prices to reduced economic growth. The International Energy Agency has coordinated efforts to release strategic reserves, but the impact on global oil demand is already being felt. As we navigate this uncertain landscape, it's crucial to stay informed and adapt to changing circumstances. The situation in the Middle East remains volatile, and the effects on the global economy will likely be far-reaching. Welcome back to the Riskwiser zone. Today we've been exploring various investment opportunities across different sectors. As we wrap up this episode, let's take a closer look at three prominent companies that have been making waves in the market: Republic Services competitor, United Health Group Incorporated, and Oracle's peer. United Health Group's tech-enabled counterpart isn't explicitly mentioned, but we do have mentions of Oracle's rival, United Health Group, and another company. We began by examining the prospects of Republic Services' competitor in the waste management industry, which boasts a strong track record of financial performance, with projected revenue ranging from $17.5 billion to $18.2 billion. The company's commitment to sustainability and its efforts to reduce greenhouse gas emissions are certainly noteworthy. Next, we delved into the world of healthcare, where United Health Group Incorporated has established itself as a diversified giant, leveraging its scale across insurance, care delivery, pharmacy services, and data analytics to generate resilient cash flows. With a 3.25% dividend yield and 16 consecutive years of dividend increases, this company is undoubtedly an attractive option for income-seeking investors. Lastly, we touched on the tech sector, where companies like Oracle are making significant strides in AI-driven efficiencies. While not explicitly mentioned, it's clear that the intersection of technology and healthcare is an area ripe for innovation and growth. As we consider these investment opportunities, it's essential to maintain a balanced perspective, weighing both the potential benefits and risks associated with each company. By doing so, investors can make informed decisions that align with their unique financial goals and risk tolerance. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.